Hey guys, what's going on? So again come up with a new video, and this time we will discuss about rule number 43 of the input tax credit rules. So earlier I made a video regarding rule number 42 where I have discussed about the reversal of input tax credit in case those input tax is used for both exempted as well as the non-exempted supply. So here in this video I will discuss about reversal of input tax credit in case the capital goods is used for both exempted as well as for the taxable supply. So we will discuss about this rule. So rule number 43, if you will check it out, then it will say about the reversal of input tax credit in case of a capital goods which is used for both purposes, like for the taxable as well as for the exempted supply. So what that rule says? There is a lot of calculation in that rule also, just like rule number 42. So rule number 43 we will discuss about it. So now first step, like this is a step by step procedure of how to calculate the amount which is you required to be reversed in case you are using the capital goods for both the purpose. So now the step number 1 is that the input tax credit which is used for capital goods, like input tax credit on the capital goods which is used for exclusively for the exempted plus non-business related activity, then those input tax credit of the capital goods will not be taken as a input tax credit into your books of account. So remember that don't take the input tax credit of the capital goods which will be used exclusively for supply of exempted supply or for non-business activity. So you are using it, you are using some capital goods for exempted supply, or you are using the capital goods for non-business activities, and don't take the input tax credit regarding those capital goods. So how you will do it? So like when the input tax credit will be reflected into your GSTR 2A, then click on, like you have the option like after those amount will be reflected into your GSTR 2A, then say this like I don't have the right to claim ITC on that. In the eligible ITC column just fill the nil. So that's how you will not be end up taking the input tax rate on the capital goods. Remember that, which are used exclusively for exempted or non-business activity. Then take the full input tax credit of the capital goods which are used exclusively for supplying the taxable or for supplying the business related activity. So therefore just take the full input tax credit of the capital goods which is used for exclusively for the taxable or business related purposes. So obviously when you are using it for the taxable supply, so obviously the full input tax credit will be taken. Now what about the common input tax credit of the capital goods which is used for both taxable supply as well as for non-taxable or exempted supply? So how will you do it? Like how will you reverse it? So first of all, take the full input tax credit when that will be reflected into your GSTR 2A. Take the full input tax credit of those capital goods which will be used for both taxable as well as the exempted supply. Take the full input tax credit, and remember that when you will take the full input tax credit, the law itself presume that the life or the useful life of that capital assets is 5 years. Remember that law itself says like its useful life is 5 years, and those input tax credit of capital goods which is common for both taxable as well as exempted supply will be denoted as TC, T small c into the GST. Like this term is itself prescribed in rule number 43 of the input tax credit rule. Now you know that TC is the amount of the input tax credit used for both taxable as well as the exempted supply. Now the next step is to calculate the monthly input tax credit, because TC is the full input tax credit of the capital goods, and you know that the life of the capital goods is 5 years. So now you have to calculate like monthly input tax credit, and how will you determine it? Monthly input tax credit can be determined as per the formula TC divided by 60. So why 60? 60 means like because you know life is 5 years assumed by the law, and in 1 year there is a 12 month. So 12 into 15 into 60, so 60 months. So TC is the full input tax credit divided by 60 months. Then you will find, or you will calculate like input tax credit for the 1 month, and that term will be given as like TM, and that TM is the monthly input tax credit of the capital goods which is used for both exempted as well as taxable supply. So that is called as a TM in the GST itself, and that like that TM will be calculated on the individual basis. So like suppose you have 5 capital goods which is used for both purposes, then calculate the TM for individual capital goods, and it will be calculated because you know that figure will be remain for 5 years, so therefore that figure will not be changed. And then after this add all the TM, and then it will be called as a TR. So suppose that TM is for the individual capital goods, and you know that you have to now add all TM for which useful life remain. So suppose you have the 6 capital goods, and one capital goods has expired the 5 year. So therefore 6 capital goods, out of 6 capital goods, just add the TM of 5 capital goods, because you know that in the TM, when you will add the TM, there can be a capital goods whose life has been expired, like whose 5 year has already been expired. So don't add those TM into the calculation of TR. So remember that. So when you will add the TM, individual TM of all the capital goods, then it will be called as a TR. So now TR is what? TR is calculation, or TR is the monthly input tax rate of capital goods, monthly input tax rate of all the capital goods which is used for both purpose, taxable as well as exempted. Now the next step is to calculate how much input tax rate is attributable for the exempted supply. So you know that TR is the whole input tax rate, and you know that capital goods is used for both exempted as well as the taxable supply, and you know that you have to reverse the input tax rate used for exempted supply. So how will you calculate the input tax rate used for the exempted supply? Like this formula: TR, you know that is a monthly input tax credit of all the capital goods used for both purposes. So therefore monthly input tax credit divided by total turnover during that month, multiply by exempted turnover during that month. So that's how you will calculate the figure, which will be called like the TE. And what is TE? TE is the monthly input tax rate of the capital goods which is used for exempted supply. So that is the input tax rate which you need to reverse. So how will you reverse it? Then next step is that you have to now fill that TE detail into table number 11D of the GSTR2, which is regarding like addition of your output tax liability. So when you will calculate it, just add the figure into table number 11D of the GSTR2. So that's how you will end up paying the output tax liability when those capital goods will be used for both purposes. So that's how it will work. And like total turnover, exempted turnover, turnover will not include the taxes, all the taxes like GST taxes or any other taxes. So in the total turnover, don't include the taxes amount, and you know that's how the principle will work. And one more important fact, that calculation will be done, like this calculation will be done for every single month till the 5 year. So because you know the life of assets is assumed at 5 year, so you will have to calculate this figure on the monthly basis, and that figure will always be changed because you know that the monthly turnover and the exempted turnover of that month will be obviously fluctuate. So therefore you have to calculate this for every single month. And what about the cases in which the capital goods will be sold out? Like suppose the capital goods is sold out for in a 3rd year. So whether you have to calculate this figure for the 5 year. So that is a question. Like you have only one capital assets and law presume that its useful life is 5 year, and you are calculating this figure for every single month, but you sold out that asset in 3rd year. So whether you have to now calculate this figure for the remaining 2 year? So answer is yes. So why? Because when you will sell it, then you have to pay tax, you have to pay GST, and you have to pay GST as per provision of section number 18 subsection number 6. Read with rule number 44 sub rule number 1 clause number 6. So when you will read it, so that rule says when you will sell out the capital asset, then you have to pay GST, and how much amount of GST you will have to pay? You have to pay GST on the transaction value of the capital goods as prescribed under section number 58. So now calculate the tax on the transaction value of that capital asset, or pay the amount as calculated under rule number 44, sub rule number 1, clause number C. The amount of transaction value, tax on transaction value, or the amount as per this rule, whichever amount will be higher, you have to pay tax on that. But when you will sell out those assets, then also you have to require to calculate this figure and add it into your output tax liability for remaining 5 years. So that's how it will work. You have to calculate this in every single month, and you know that TE figure will always be changed because monthly like total turnover of that month or total turnover exempted supply of that month will obviously fluctuate on every single month. So you have to calculate this figure. And there is also a case, the law says like those assets which are used for both wholly for exempted and for non-business purposes now transfer into clause number C, like for this, which is now used for both taxable as well as exempted supply. So those goods or those capital goods which was earlier exclusively using for tax for exempted supply, but now using for both purposes, exempted as well as for the business purposes, or exempted purposes as well as for the non-exempted purposes, then how the input tax credit will be taken. So now you know that at the time of exclusively used for exempted supply, no input tax can be taken, but now you are transferring it into the both uses. So obviously you have to now take this input tax credit, some amount of input tax credit. So how will it calculate? The law says that in that cases the TC amount of that input tax credit will be calculated like the total input tax credit of that capital asset reduced by the 5% for every single quarter or part thereof. So that's how the TC amount will work. And now all the calculation will be remain same, but just like the TC calculation will be changed, and that will be total input tax credit less 5% of 5% for every single quarter or part thereof. So suppose like you use some kind of a capital asset exclusively for exemption purposes for the 8 months, suppose 8 months. So now you are transferring that capital asset into this category for both purposes. So now first check out the total input tax credit of that capital asset and then reduce 5% for every single quarter. So how much quarter in 8 months? It's 2 quarter plus 2 months. So it will deemed as a 3 quarter. So now 5% for 3 quarter will be 15%. So therefore total input tax credit minus 15% will be the TC amount, and then all the calculation will be done similarly, and the 5 year will be deemed from the time when you first use it for the exclusively exempted supply. And similar case will be also there when it is used exclusively for the taxable purposes and now shifted into both purposes. Similar calculation will be also there. And one more important thing, like when you will read that is rule number 43, sub rule number 2, there is a line provided like this, that thing like it will be added into your output tax credit, output tax liability, that is provided in rule number 43, sub rule number 1, clause number H, I think. And that is say like the amount of TE along with the applicable interest shall during every single tax period of the useful life of the concerned capital goods be added to the output tax liability of the person making such claim of credit. So that clause is saying like the TE will be added to the output tax credit, output tax liability of that person for every tax period during which such input tax credit is claimed. But they are saying like the amount of TE along with applicable interest. So why the applicable amount of interest? Like what the interest they are talking about? What kind of interest that is? I don't know about it, whether that is a time value of money or that is a different type of a interest. I don't know what is the intention of the lawmaker with the applicable amount of interest. I don't know about it. So we will see it in the future when the thing will be clarified. But for now, ignore the interest component. Just do the calculation as per these cases. So that's how it will work. So, on selling the capital goods, do the calculation like this and calculate like this in case the capital goods is used for both taxable as well as exempted purposes. So let me just again tell you the procedure. First of all, don't take the input tax credit of the capital goods exclusively used for exempted purposes. Take the whole input tax credit for capital goods used exclusively for the taxable purposes. Take the full input tax credit of the capital goods used for both purposes. And then the law itself says that the life is 5 years and the amount of input tax credit will be TC. And then after that amount, calculate the monthly input tax credit of that capital goods by dividing 60 with the TC. That amount will be called the TM. Now add all the TM for all the capital goods. That will be called like TR. TR is the monthly input tax credit of all the capital goods used for both purposes. Just now calculate the input tax credit attributable for the exempted supply. How will you do it? Just make the TR divide by total turnover in that month, multiply by exempted turnover of that month. You will calculate like the TE. But while calculating total turnover, exclude the tax component. Then add those TE into table number 11D of the GSTR2. And when you will sell it, calculate the tax on that capital goods as per section number 18, subsection number 6. Read with rule number 44, sub rule number 1, clause number 6 of the input tax credit rules. That's how it will work. And what is that? That is just the key ring which you will get when you purchase the 5 Mentos toffees just for the kids purpose. So that's how it will work. If you have the query regarding those, you can ask me on the comment section. And if you have any query regarding any section or provision of the income or of the GST, then ask the query on the comment section. I will reply it by way of separate video. And one more announcement, I'm just starting another channel for the Indian accounting standard or the Ind AS, where I will discuss about the Ind AS and about its applicability, changes and everything about it, because I am done with the GST. I have discussed almost everything single topic in the GST which is relevant for you guys. Although there is some more topic remains like the employees, for the employees expenses, how the GST will work, and then for the GST jurisdiction, how to find out GST jurisdiction. And then there's also small issues which I will like accounting, bookkeeping, and how to cancel an invoice. And then there are almost 10 or 15 topic which is remaining. But apart from this, I have covered extensively in detail about every single practical aspect of GST. I have almost tens of thousands of people are watching my videos. They are educating. So now I am educating the people who are applying the Ind AS into this company, because Ind AS is applicable with this financial year, and in the next financial year it will be applicable on the small companies also whose turnover is like certain limit. So therefore, and also I want to break my bubble, so I'm just staying in the different mode. But it will not mean that I will be completely get out of the GST. I will make the video on the GST, and I love, by the way, those kind of video where you ask the query on the comment section and I replied it by way of separate video. I love that kind of video. I will definitely will not go away from this channel. This channel is my first channel and I will remain with this channel forever, I think. Forever I think. Therefore, it doesn't mean that I will go away. It simply means that if you have interest in the Ind AS, then you can also subscribe to my second channel. I will make the announcement into, I think, the next video, where you can subscribe my those channel if you are interested in knowing the Ind AS. And you know that it will be very in-depth analysis of the Ind AS like no one has ever done before. Alright guys, so now we will meet in the next video. Till then, bye bye.